Hello traders and welcome to another video review. Today is Tuesday, November 21st, 2023. Let's take a look at the Forex economic calendar first. What is going on the economic calendar? You can see that we got some of the very important data releases today. We still have the ABA meeting minutes. It was released overnight. Labor productivity from the UK has been published already with the actual reading of minus 0.2%. The previous was 0.7. We will still have plenty of the comments from the Great Britain. Bank of England MPC member Peel will give a speech, Governor Bailey will give a speech, MPC member Van, Ramson, Haskell, because it's all about the inflation report hearings that start at 11:15. All right, so there's plenty of the remarks from these people, the MPC members. During the New York session, we got the Canadian data, core CPI and the CPI are scheduled for release at 2:30 together with the new housing price index. And then we got data from the US. The most important one is the one with the red dot, which is the existing home sales. This one is scheduled for release at 4 o'clock again. Then we have the global daily trade price index from New Zealand, scheduled for release at 4 p.m. Then we got the speech from the ECB President Christine Lagarde at 5 o'clock, and the ECB Schnabel will give a speech as well, 15 minutes past 6. And the second key event of today is the FOMC meeting minutes release, scheduled for release, of course, at 8 o'clock p.m. And we end the day with the API weekly crude oil stock data scheduled for release at 10:30. So generally, the whole day is about the FOMC meeting minutes and existing home sales. So it's all about the UK and the UK and US basically. So with that situation, let's start with the euro dollar, and then we will we'll continue with something different, for example, like the British pound. So for our chart of the euro dollar is showing us this narrowing pattern here. It might be some sort of the ending diagonal, and we just recently hit the level of 1.0966, which is the 61% of the Fibonacci retracement of the last big wave down. So this is it, big wave down, and the 61% is here. We just hit it. We just hit this level here, and the market conditions on the daily time frame chart are extremely overbought as well. So we went from the lows at 1.0455 towards the level of 1.0966. Okay, so from the extremely oversold market conditions to the extremely overbought market conditions. So now the market is ready to go down, at least technically, on the daily time frame chart and on the 4-hour time frame chart. Moreover, on the 4-hour time frame chart, we have very clear bearish divergence forming between the price action and the momentum oscillator, and we have 61% of the Fibonacci retracement, and we have the ending diagonal. Plenty of the indicators are telling us, plenty of signals are telling us that maybe this move to the upside should be terminated. Basically, the trigger might be the FOMC meeting minutes release. That was the euro dollar. Let's switch to the pound. The British pound since yesterday moved higher. It moved higher towards the level of 1.2536. Nevertheless, this is the bearish divergence as well forming here. The next target is now 1.2550, and if you take a look at the daily time frame chart, you can clearly see that this is the technical resistance and the swing low from the August 2023. So if we hit this level, there is a chance that the daily time frame chart and the RSI on the daily time frame chart will hit the extremely overbought levels as well. Let's go back to the 4-hour chart, and what do we see here? is the market narrowing this latest move to the upside. So the level of 1.2504 will act as the technical support, and the level of 1.2428 will act as the technical support as well. We are still trading above the 50 periods moving average. We are still trading above 100 periods moving average, but it looks like the market might trigger a pullback lower anytime soon. Let's switch to the US dollar, to the Canadian dollar. What do we see here is still a continuation of this kind of a movement to the upside, right? So we got this bearish divergence and we resolve it. So right now we don't need this these arrows anymore. Let me just remove it. We are still trading above this trend line. You can see it here. Long-term trend line. This trend line has started in the July 2023, so the market keeps bouncing from it, keeps moving higher. Nevertheless, the recent price action is telling us that the lower highs were done and the market might not be that keen to move higher anymore. Let's investigate a little bit closer. So what do we have here? Let me just move this this level. For the intraday technical support is 1.3689. For the intraday technical resistance is the level of 1.3775. So those are the technical resistance and support. So we got one more horizontal technical resistance located at 1.3853, just below 1.3867. So this is the zone of the technical resistances, and we need a breakout higher, of course, a new swing high in order to continue 1.3887. Right now we are hovering around the moving averages on a 4-hour chart, around 150 periods moving averages. So it won't be wrong to notice that the technical support is located at 1.3653 and it's located at 1.3628. Only a sustained breakout below this zone would likely mean that the trend line will be tested, and if broken, then of course lower levels might be hit. The next technical support, important technical support, is located around the level of 1.3568. The momentum is slightly negative, 48 points only. It moves and hovers around the level of 50. So right now, neither bulls nor bears know where they want to go and what they want to do. So maybe the situation with the FOMC meeting minutes will give them some clues. And last but not least, let's just take a look at the Bitcoin, of course, because it's very interesting what the Bitcoin is doing these days. As you can see, the Bitcoin keeps hovering very, very close to the recent swing highs located at $38,000, and this range, this range here between the local technical support at 35,619 is getting very, very important, because we got swing high, we got the first attempt to break above the swing high, no new low was made. Now we are hovering just below this this level, roughly less than $300 from the highs, and the 10%, I think it was 10% technical correction was done already. So you can see this from this high to this low was 8.83. That's fine. 8.83% correction was done. Market is ready to go higher. Momentum is positive. It's not that strong, but it's still positive. We bounced from the extremely oversold market conditions on the 4-hour chart, and the bulls are ready to move higher soon. Only a sustained breakout below this level here, 33,244, would change the outlook short-term and mid-term to more bearish. Otherwise, the outlook is still bullish, especially as long as we trade above 34,671. This is the low from the November 14th. So please prepare for another possible rally on the Bitcoin soon. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye-bye.